Jefferies joins us on the show now. Sean, hi, morning. You're bullish on the S&P within global asset allocation, but would you hold this view for the second half as well? Because markets do look rather vulnerable right now to the threat of money supply being withdrawn by the Fed.
Well, certainly earnings to date have actually beaten expectations by around about 64%, and also sales revenues, which had always been a weak spot for most companies, have also beaten as well the expectations. I think overall the tone of the reporting data so far has been actually much more bullish than people would have expected, and more importantly now in the US you've got a steepening yield curve, which is generally very good for financials.
Sean, the data points in US this month have been mixed. New home sales data jumped up to 5-year high. Labor market is still dealing with elevated levels of unemployment. What did you make of the jobless claims and other names which have come last evening?
Well, certainly the economic data has been relatively mixed, but in the last couple of weeks we've seen also the Federal Reserve Philadelphia index actually hit a 28-month high. Durable goods orders over the last 24 hours has also showed a substantial rebound. The good news, I think, on the macro front is that actually inventories look relatively lean versus shipments, and that generally presages a pretty good quarter of growth for the US. And as I said, monetary conditions still remain very, very buoyant.